Good morning, everyone, and welcome to the August edition of the Hyperledger Financial Markets Mortgage Subgroup meeting. Before we get started, I'd like to express my appreciation to the Financial Markets Special Interest Group and the Hyperledger Foundation for their ongoing support and just making this group possible. So definitely appreciative of all of their help and support. And with that, why don't we just dive right into the next slide? Okay. As always, we want to start out and note that this meeting is being recorded and is under the umbrella of the Hyperledger Foundation. So we ask that everyone abide by two items: the antitrust policy and the code of conduct. The antitrust policy states that we avoid discussions of company-specific products and projects. We don't make negative remarks about other companies and products. And for the code of conduct, means that we treat each other with respect, never discriminate, and communicate constructively. Excuse me. We fully support Hyperledger's policy of openness, equity, and inclusion. And for new participants, we welcome you. If you'd like, just please introduce yourself in the chat. If there are any specific areas of interest, please let us know, and we'll try and cover those either in this meeting or future meetings. So welcome, everyone. Okay, here's our agenda for today. We've gone through the welcome and meeting housekeeping, just a brief Hyperledger community announcement next. Then James will walk through the state of the blockchain in the global and US markets. We're going to have the Ranieri team and IBM team walk through blockchain and mortgage servicing, and then we'll go through future agenda topics. So I always like to go through the slide because this slide is just to reinforce what this whole meeting and this whole group is about. We're all in the same blockchain journey, although we may be at different points in that. This group is meant to help everyone on their blockchain journey. To number one, demonstrate the feasibility of blockchain technology through mortgage industry use cases, and two, define potential implementation paths for the mortgage industry. That, I'm going to get off my soapbox, but I'll hop on at any other time. Okay, community information. I just wanted to do a brief public service announcement. You guys have all seen that Capital Markets SIG changed its name to the Financial Markets SIG. This update is ongoing. If you're getting multiple emails, multiple notices, please delete yourself from the Capital Markets mailing list. And I'm sure you're already on the Financial Markets mailing list. So let's just make sure that we get through this transition as smoothly and quickly as possible. Okay, additional information that we try to cover in every meeting. The next three slides I always mention for people that are new to the group. This slide shows the different sites for the Linux Foundation, Hyperledger Foundation, Financial Markets, and the Hyperledger group as well. So these are great links for additional information, especially the GitHub. The GitHub is fantastic for Hyperledger. To access that information, you're going to need an LFID. So this slide helps you go through it, and the video is very helpful as well. I won't go through that in detail. Then the blockchain training, free training. I mention this every time. I've taken this training. It's fantastic. Couldn't spell blockchain before. Now I think I can come close. Okay, that gets us to the state of blockchain in the global mortgage industry. And I'm going to hand it over to my good friend, James Hendrick.
Marvin, thank you very much. I love your whole being able to spell blockchain. All right, so jumping into some of the new items in the mortgage industry and blockchain. Marvin, let's go ahead and move on to the first slide for global. So again, just a refresher for everybody. These are all articles that we've covered in our previous meetings. You know, last month's theme, we were talking about consortiums. You're going to see a little bit of a flavor of that in this month's announcements as well, in that there's a variety of companies that are starting to team up together on different initiatives. We've also, from the global perspective, we've kind of been traveling around from continent to continent on the planet, and this month happens to bring us back to Europe. Marvin, next slide. So starting out in London, Bank of New York Mellon and Goldman Sachs have successfully completed the industry's first agency securities lending transaction using HQLA distributed ledger platform. So the total size was in the hundreds of millions of US dollars, and HQLA actually created an ISIN level securities tracker called a digital collateral records, or DCRs, from loan securities. If loan securities it received from Bank of New York Mellon, and then Goldman Sachs provided a digital copy of those trades. The ISNI or ISIN level DCRs are the very first of their kind in the industry. They represent specific ISIN quantities held in custody, and those records will enable holders and agencies to transfer ownership of any security on the HQLA distributed ledger without having the need for, conventional settlement mechanisms that we're used to. Also coming out of Europe and Bulgaria, AQRU has announced a partnership with Blimp Homes to launch a crypto mortgage platform titled Bybrix. Blimp Homes is a home search and transition collaboration platform that rewards its users for browsing homes, and it connects borrowers, sellers, and real estate professionals. AQRU is focused on the DeFi space, and they're aiming to provide a more efficient and secure way of providing financial services. And they believe there's a sufficient market for crypto-backed homes, noting that there's around 147,000 wallets out there currently holding $300,000 in Bitcoin or more. And AQR and Blimp both believe this represents a huge opportunity to manage crypto-backed mortgages. So we're going to be keeping our eyes on this one to see how it progresses throughout the year, and we'll bring additional updates in future meetings. Marvin, let's go ahead and move on into the US space. So, similar to before, we've had a variety of companies that we have talked about over this last year of meetings. Actually, both of the articles that I pulled in for this month will touch on some of those previous companies. Next slide, Marvin. So there are 3 mortgage companies that are partnering up with Figure. You've all heard of Figure by now. We've talked about them quite a bit in these presentations. Guaranteed Rate, Homebridge, Synergy One, they've all partnered with Figure to leverage Figure's HELOC technology to create a new branded product. Figure's HELOC application process is entirely digital, and the application takes as few as 5 minutes to complete, and approval can come within a matter of minutes. Figure saw record demand for its branded HELOC product in the month of June, surpassing over $325 million in funding volume. And the total was the 8th consecutive record month of Figure's HELOCs, and represents a nearly 300% increase over the past quarter. Their HELOC volume was up 58% in Q2 and is continued to expected to climb in Q3 as demand for the product continues to grow. And we've talked about that in some of our previous sessions, that as we're watching what's going on in the interest rate market, that HELOC is a prime area of business that companies are going to be focusing on. Likewise, for Milo, if you'll recall, we actually first introduced this Miami-based fintech company back in our February presentation. They were talking at the time about launching a crypto mortgage product, which they effectively did in April of this year. And since that time, Milo has closed over $10 million in cryptocurrency mortgages with this product. Just as a reminder on what this product is, through the crypto lending program, Milo allows borrowers to pledge their cryptocurrency through regulated custodians such as Coinbase or Gemini. They require no down payment other than pledging the cryptocurrency as collateral. And the interest rates right now are running about 6.95%, but those can change on an annual basis on this product. What happens is annually, Milo actually reviews the asset ratio of crypto assets that are pledged as a security to the loan amount, and that in turn directly has an impact on what their interest rate is for the following 12 months. They started out with roughly about 20 employees at the beginning of the year in this space, and they've already doubled that to 40 employees. And Milo has plans to soon introduce a crypto mortgage refinancing product. So again, keep your eyes and ears open for that. And as we, receive future announcements, we'll continue to be sharing with this group. Marvin, on to the next slide. Yeah, and here's just a reminder about the Hyperledger wiki site. In fact, I'm going to drop into the chat the link for everybody to quickly be able to access it. I just want to do a reminder about this site. As Marvin walked through the links in the beginning, you can find access to all of those links from the site. You can sign up for the notifications. That way you'll get notified of our future monthly meetings, as well as when we're publishing articles up to the site. Also on the left-hand side, you'll see copies of all our previous presentations. All of these presentations are recorded. So at any time you like, feel free to come to the site, go back into any of our previous months and see what we were talking about or discussing. Marvin, at this point, I'll go ahead and pass it back over to you.
Thanks, James. That's some great information as usual. And now what I'd like to do is introduce our next speaker, Karen Belleza, the Chief Operations Officer of Ranieri Solutions. Karen has an extensive background in mortgage and mortgage servicing, which includes being a founding employee and past president of Selene Finance and leading the company from a startup to over 10 billion in servicing. Karen was also a managing director for Capmark Finance, formerly GMAC Commercial Mortgage, where she was responsible for offshore activities, including European and Indian operations, and leadership roles for the company's REO disposition group, foreclosure, and bankruptcy units. She has an extensive background, so I'm going to stop there and just hand it over to her, or we're just going to keep going. So I'm going to hand over control to the Ranieri team. Welcome, Karen and the Ranieri team.
Thanks, Marvin. Thanks for that intro. I've chosen to forget a lot of what you just mentioned. Thank you. So I have here a group of folks from Ranieri. Some of us will talk and others are responsible for a lot of the work that we've done so far. So I wanted them to be here for our little party. So first, I wanted to just explain, if you don't already know, I think most people know who Louis Ranieri is. He's the guy we named the company after, and pretty well known in this industry in housing and mortgage. He's been long known for innovation in this space. As you may know, he's the guy who first conceptualized the securitization process, which really changed this industry and gave folks access to mortgages across the US. In some pockets, you really couldn't get access unless you happened to have a bank in town. So this sort of smoothed out the access to mortgage finance. For us, for this endeavor here, he brought together a team of industry veterans. I'm one of them, and challenged us to come up with a solution that would transform housing. And of course, some of us spent you just read my bio. I spent a lot of my career in servicing. I did have a few years in originations and also about 10 years in commercial, but in servicing. So you kind of have a good view of where the pain points are in this industry. And we spent some time thinking about, the end-to-end mortgage process and where are the problems. And of course, it would have been easy to start at the beginning. That was my first instinct was, well, start where the mortgages originated and work our way down the line. But to be honest, what we thought about and your vision statement for this group kind of got my attention too, because you talked about closing efficiently as an auto loan and provide a superior customer service. We thought about that, but then where does the loan go after that? If you originate it on blockchain, for example, where's it going to go? It's going to wind up in not a blockchain system, but a mainframe system. That's there are two that are prevalent in the industry today. So we started with servicing, And as you go back one for a second, Will, go back to that slide. So the light blue boxes there kind of depict some major activities in servicing, and it is significant in size. It is, and we talked to Marvin the other day, and he made a comment. You picked the most complicated place to start. And we did that on purpose because we thought if you're going to leverage blockchain technology to do this, then the loan needs a place to go where it's going to live and the data provenance is secured, and can be locked down and trusted. If you originate on blockchain and then dump it into one of those mainframe systems, you've kind of lost all of that advantage. So we started with building a servicing system. And as you can see here from the darker blue boxes, there are a lot of entities involved in servicing the loans. At the bottom of this slide, we've shown just a few of them, but there are multiple vendors, and there's the borrower and attorneys, regulators and insurance companies and tax payers. So this is a pretty big system, and we're going to give you a look at it in a minute. There have been a lot of improvements in the industry in the servicing area, but most of them are around the edges. There's been new tools bolted on over time, but the core systems really haven't changed. And it's really difficult to change because of the breadth and depth of the system. And adding these new tools onto the sides of it create their own problems, and creates problems in maintaining and managing and being able to make changes. Regulators have been putting more and more pressure on servicers over time. So the ability to accommodate a new change or a new data requirement is really important. And for a servicer to be able to prove what they've done, to have that information to be trusted is really important. So our goal is to create a more modern platform for housing, beginning with servicing, leveraging blockchain to improve the homeowner experience and servicers' economics. So it's a big charge. We are at a very cool place along your timeline, Marvin, that you were showing. We're almost at production. So we are pretty far along. We've stayed very quiet. We haven't been out on the radar. We are not doing press releases and talking about what we will do. We're going to get out and talk about what we have done, so that you can be sure that what we talk about is coming to market. So I talked about why we started with servicing. This slide here just kind of gives you our view of blockchain and the value proposition as it applies to servicing. And I think this is kind of our guiding light as we think about how we're going to deploy blockchain here. We've got our subject matter experts. Many of them are here on the call today. We've talked to many servicers of all sizes to get some feedback on, what is the need? What would they want? What would it take to get them to convert? We have been encouraged at every stop along the way to come up with something. They want to see an alternative. So our main objectives, and this is answering the call from the servicing community, they want a cost-effective system with easy navigation. They want the customer experience to be improved. And we're going to show you how that'll happen here in our system in a minute. They want to be able to accommodate regulator changes and requirements more easily. Today, if a new requirement comes out, an example, one came out a couple weeks ago, you have to be able to accommodate a borrower's language preference, which means in the system, you need to know what the language preference would be. That is a change that, while it sounds pretty simple, it's a challenge in some of the mainframe systems today. We can make that change very easily. In fact, it's already there. And we need to be able to maintain an immutable audit trail so we can prove compliance with the regulator's requirements. So we're going to show it to you now. We've got an end-to-end system that we've built. We're just going to give you a little glimpse of it because we don't have a lot of time here today. But this is the result of all that work, thinking about what it is and we're going to get Christy to show you the demo. But we had two primary servicers that worked with us just to make sure we're up to date on all the requirements and what needs to be done. We also consulted with vendors who are in that ecosystem, who work with the servicers and are suffering an equal amount of pain from the systems that are out there today. So we're going to bring you, this is the system live. So this is the landing page, we call it. This is where you would start out. If you're familiar with any of the other systems, you're starting out on a green screen. A few of them, they've got a new front end. They put a new front page on it, so you're not kind of looking at a green screen. But this is our landing page, and our goal here was to make sure that the person who's on this page, who brings this loan up, maybe you're talking to a borrower, all the relevant information that you would need to do the job, answer the question, and not make a mistake is here. So each of the items that are on the banner were thought through, and this will give you a quick view of the loan status, any alerts or flags or warnings that would be on this loan come right to this front page. So you don't have to dig back. You know, the way it works today in servicing is you have to dig back into the comments and notes to figure out what's going on. So everything is here. If the borrower is called in recently and asked for something, if somebody's working on something on the loan, you can see that. You've got all the balances and property addresses, and anything that's going on this loan would be right here. Christy's pointing at a series of modules that you can jump to. So again, in the other systems, you have to know a screen name in order to type that in and bring yourself to a default screen or the investor screens. They're all easily accessible just by pointing your mouse at the proper module. We also know from our experience that history of the loan is super important. So for any one of these modules that has some loans history connected to it, you can get easily to the loan history. You can get to a history of just cash transactions or just default transactions, just escrow transactions. All of that was built in to the system. One of the things that I love to show is documents. So in servicing shops today, you have a separate document management system. And this will be important for you to take note of as we show you the POC on the loan transfer. Documents live in this system and accessible from the loan and even from a module. So if you're in a foreclosure module, Christy, I'm sorry, I know I'm jumping all over the place on you, but in the foreclosure module, you can see foreclosure documents without having to leave the system and log on somewhere else and see if it's there. You can get a quick view of whether there's a document out there, and you can access it from here. So that eliminates extra cost for a separate system, and eliminates a lot of time in having to skip back and forth and find what you're looking for. One thing we'll show you real quickly is, Christy, you wanted to show, yeah, go ahead, property. Why don't you take over from here? Can you open your mic and talk for a second?
I can take over, yep.
Yep, go.
So as she was talking about foreclosure and documents, so here I'm going to add a couple of inspection things for the property insurance claim that's open on this guy. It's as simple as this, and now you can see those two are here. And then if I go over to property insurance claims on this open claim, go down to the bottom, it's now telling me that there are 3. Let me move this bar out of the way really quick. There are my 3 documents right there. And then the other really nice thing is there are some things that you can order out of the system: inspections, valuations, and title orders. And it's as simple as I hit a button, I hit order inspection, I pick my vendor, my order date, my type. I can put a comment if I want to, and I hit order inspection, and then there will be a file that goes out and goes to that particular vendor that they can then receive into their system and then do the inspection and then send back that file, and it matches up on that PO number that you see there, and it will get the data back and update that order for the inspection.
Okay. So you can see, go ahead.
Just really quickly, Karen, overall, I really like the UI. It's very clean. I like things simple because I'm so simple-minded. So definitely kudos on that. every time I think about a loan servicing system, I think about it's just a huge rules engine. So tell me how you guys handled the rules and build up from there. And then I'm sure that there are going to be questions on what's on chain, what's off chain. I mean, a whole mess of technical stuff like that. But we can get
we're coming into that in just the next slide or two. So, but yeah, the rules, right?
Go ahead, Christy, take the rules engine, please.
So the rules engine, there's a whole series of configs. There's roughly 40 of them, and they each touch on the different sections that you see down in here. So for escrow, there's a lot of rules around escrow. For example, you have to have your cushions. You got to have your whether or not you release funds on an escrow overage, right? And some people will be more conservative than what the actual rule is, and so we give them the ability to, even within their own shops, manage their portfolio the way that they see fit within the confines of the rules. So without going to all the individual ones, you can see here we have a couple of configs already built into the system, which allows them to do those rules. And then we have some more looser rules that are Merlin specific, which includes things like being able to put holds onto the loan to keep certain things from happening in the event of bankruptcy or foreclosure, right? And they may have a series of things that they want. They get to decide what those are. And then the system reads that and says, oh, this loan's gone into bankruptcy and now no regular payments can come in, and whatever it is that they decide the sky's the limit, really. And then we do have some other rules based onto the fields themselves. Like you can't put alpha in a numeric field, those simple rules. That's most of what the rules engine is doing right now.
Okay, great. Thank you.
So I think that's all the time we have. This demo takes us about an hour and a half or so. So we tried to cut it down just to give you a taste for what it is, but I think Will's going to go into some more technical detail around the platform.
Right. I wanted to be cognizant of the amount of technical material we have. Not that it's that great for today, but I think we're going to dive into some specific blockchain topics that might pique the interest of the group here. So this is just a high level view, and I'm going to ask one of our colleagues from IBM Consulting to join in, and Krishna can jump in and provide some kind of like the color commentary here as we go. This is a kind of a high level look at our target network. Starting out with the first version of the system, the idea is to get the servicer's needs met. But while we're doing that, we're building a system that will provide future capabilities. And so I guess the question: why do we choose Hyperledger? And I'm not trying to do a sales pitch or anything. I just wanted to go through the kind of things that we thought about and what made sense to us and what will be part and parcel of our application. Primarily, obviously, the blockchain is providing tamper-proof evidence of the mortgage record over its long life. And I think there's some folks on the call here who could take that and run with it in terms of what extra value that'll provide. In addition to that, the mortgage servicer, the borrower, the vendors, regulators, they're not on this chart, but they're certainly part of this. They are all part of a kind of a de facto consortium of the way the industry works today. And so there are future use cases that can be decentralized, but for now, our focus is on the tamper-proof evidence. And you'll see why I'm leaving transparency out for now, but we'll cover it a little bit later in the next demo where we're showing you a proof of concept of how we can transfer mortgages from one servicer to another, taking advantage of the blockchain technology. We saw some real world usage in large scale enterprise applications. I'll give you an example. TradeLens is one of them, demonstrating high performance and reliability under load and usage. I think that Hyperledger is well positioned for financial services. Some of the capabilities that we're using now and we'll use in the future, channels, and of course, maybe private data collections. We have a way around that today, so that's not so important. It's open, it's modular. I think many of you know this sort of thing. Open chain code languages available, pluggable consensus mechanism. Raft, for example, with its election log replication, it provides crash fault tolerance, which is more than sufficient for the Merlin's usage. We're a private permission blockchain approach. Interoperability for future capability, ability to handle ERC20 tokens, things like that. certainly the publicly available documentation, chain code and patterns, just a wealth of information that's available from the community, and then of course the ongoing support. So some of the reasons why HLF was our chosen direction forward. Christian can explain some of the technical aspects of the diagram here.
Yeah.
Thanks, Christian.
Yeah, with respect to the nodes, I want to touch with the nodes. Usually within a consortium-based blockchain network, a member organization may be choose to participate directly or indirectly, right? If the member organization is a direct participant in the network, meaning that it owns or operates a node on the network, and they have a stake and may influence the overall governance as well, but they will have to consider the onboarding and operation costs. But if the member organization is an indirect participant in the consortium network through a platform-owned organization, here in the instance, it's Maryland platform, they will have lower participation costs in the network. And here multi-tenant is an indirect participation. Services like medium or large may choose to join or own their own node to participate. Or on the other side, they may choose to participate in a multi-tenant. Similarly for investors and vendors, and not limited to these participants, and but many more to join the network. So with respect to the context, node here in this, they're having both application components along with the fabric, Hyperledger fabric components. And with respect to the channel, in the middle is the Hyperledger fabric, which will just mention about its capabilities, which connects the participating nodes.
Question, Christian. So if I interpret this diagram correctly, the investor node, for example, would be a node for investors. It wouldn't be a node per investor. It would be a many-to-one relationship. Same thing for all of the other nodes. Is that correct?
Yes, so again, an investor node can be a multi-tenant node, or a large to medium or medium to large investor wants to have their direct participation, as I mentioned, can also own a node on the network. So that, that comes with the operational and onboarding related costs, as I just said. But
I think the value here with Hyperledger is the ability to have, for example, a multi-tenant node where there's logical separation is a huge benefit compared to some of the other choices we had, just in trying to operate a business and trying to provide, some rational approach to a business model. There's no need for physical nodes, and that's a big benefit.
Yeah, absolutely. Because one of the things we ran across in an earlier POC is if we did have one company per node or one entity per node, then the cost of the blockchain just skyrocketed. So it's a much more efficient approach.
Sure thing. Latency performance becomes a major issue as you expand it out, and there's no need for that. So that's good. But so let's take a real quick at some architecture. Just to give you a feel for what we're trying to do, we didn't want to get into too much detail on that because it takes away from the overall presentation. But basically, we're following the platform architecture with IBM Cloud for Financial Services reference provides a really great base for us because the industry requires at a minimum SOC 2 Type 2. We're doing some other things as well. But the nice thing about the cloud environment is that the key services are, I'll say out of the box, quote unquote, with the appropriate configurations are already proofed and are already part of the IBM SOC 2 Type 2. This is very important for our client base. And as well, there's some near HA service resiliency. Obviously, that's something that has to be carefully dealt with in terms of putting the operational system together. But overall security by design is just baked in. So that's really a big help in getting the product launched as quickly as we can and then being able to operate it. And then, of course, the application that sits inside of all of that, we like to say we're approaching Web 3.0, but we won't claim that we're there. But, it's private permission blockchain, open source software, microservices. IBM's been a great help with helping us pull that together. API interoperability is the core of the system. everything that you can do, every screen, every interaction can be done through the appropriate APIs. Ranieri is looking at, opening APIs where it makes sense with the vendor community, things like that, so that we can provide great support, but also make it easy for the industry to do what it has to do. So all those screens that Christy was showing you, different things, everything is of course API based, if you will. And cloud native, horizontal, vertical scalability. Christian is going to talk about some of the details of the data platform. Code maintainability, Karen talked about that before. That's very important. And of course, it's partly the tools in the product we're using, but it's partly the approach that you take. You've got to be able to make changes to the system quickly, and that's all there. And of course, from the application standpoint, security and privacy by design. And of course, we plan a SOC 2 type 2. We recognize that's just an absolute. So I just wanted to touch on that really quickly without getting into too much detail.
Will, just a quick question on the open source software tools. Can you just speak really quickly on what your tech stack looks like? I think you kind of interspersed a little bit about that, but I don't know if you can talk about that.
I can. Well, let's jump here first, and then we'll cover the rest of it. All right. Okay. We'll start at this point, Krishna, if you wanted to explain this, and then we'll move it up from there.
Sure, definitely. So part of this target state, we got certain data store components. If you see from top row consists of like 2 rows again. Hyperledger Fabric consists of 2 related data stores. One being the ledger itself, it's a transaction log, keep adding the mutable related records, and keep growing on that side of the ledger. And the other component in the Hyperledger Fabric itself is the world state. It can be a CouchDB or a level DB, but CouchDB helps enhance us in case if we want to have some kind of a rich query, but there are options there. And so the world state will always have a current value where whatever we are trying to store. But in this case, we are trying to store the proof of the transaction or the loan transaction, and that particular component would take care of to store the current values. And if we move down to the next row, off-chain consists of multiple stores again, one being the Postgres SQL. The reason for that is like a lot of relational database activities we do see on the mortgage industry, right? So for that reason, we are going to store majority of the data into the Postgres, and that particular loan content will be hashed out and put on the on-chain so that we have a proof going on there along with the off-chain store on the Postgres SQL. And if we see another component on below the Postgres is the object storage, where it will actually capture all the documents like huge documents like PDF, JPEG, audio, or any kind of a media file. Instead of putting them onto on-chain or off-chain, we chose to put it on some kind of an object store. So that now the large files can exist there, and their hashes will still be correlated back into off-chain PostgreSQL as well as onto the on-chain, so that we have it referenced. And similarly, the in-memory cache, predominantly for APIs, any kind of lookup data, or for the UI related lookup data, frequently used data, we plan to use that as well.
So to add on to that, you notice that's the data platform, and I'm just going to drag this across real quick, and just to, well, I think I'm going to do them. This is a high-level reference architecture that kind of gives you Krishna just covered the data platform here, and we're not going to get into the details here. We don't have enough time, but you can kind of see this is essentially the system, if you will. Yeah. So, and you can get details of this just from a reference architecture standpoint. It's not magic secret sauce. I think what we're doing in some of these cases are pretty cool, but it's UI code. There's application services that support it. Security underscores the entire system. We will be adding a data analytics module to this as well. And we've got some pretty neat ideas on how that's going to be fed in a near real-time way, so that it'll be essentially real-time data without affecting the performance of the system. So we think that's pretty unique. So this gives you kind of feel for it. Of course, and it all sits. It doesn't sit on top. It sits inside of the cloud. So that's just a quick glance at that.
I will. This is Angel. Just wanted to jump in here. We got a couple questions in the chat here.
Okay.
Now, where are the nodes being hosted on? That's one.
Yep.
And question number 2 is, are you using IBP or IBM Cloud or just plain Fabric?
I can do that.
Yeah.
Kristen, why don't you take it?
Yeah, yeah, sure. Well, you can add, in case if I miss anything. So
Cool.
the nodes will be hosted on IBM Cloud, and as Bill mentioned earlier in the slide, Financial Services Cloud on IBM Cloud again, which takes care of the security and whatnot, other aspects of it. So to answer your question, the nodes will be on IBM Cloud. In case you are looking on what tech component, it's like a Kubernetes or OpenShift kind of component where the nodes will be getting on it. The whole Hyperledger Fabric will be installed on any of those Kubernetes or OpenShift. Sorry, in case I missed any other point. What was the other question? Sorry, I'm not trying to.
Yeah, I thank you for answering those questions. There is one more question. When a lender transfers to a servicer, are you connecting to their LOS or importing, or is it being done via a file dump?
Well, that's a version 1 versus a version 2 and beyond question. So the answer, of course, to get the product out the door, given the state of the industry today, would be the file dump, because that's how servicers work today. But we have every plan in leveraging the API nature of the system to be able to interconnect. We do have a system that's on our first on the list, but we're not going to get into that here today, that we would want to have an API connection. We have to look as the industry evolves as to how that would work. Obviously, you're going to want to have an automated approach to that when the origination system is blockchain based. But really, the world that we're looking at as we get to the end of this year, beginning of next year, the file dump is the way to go to get the product launched. Yeah. I hope I answered that. I mean, yes, we have great plans on how to use this technology to interoperate, if you will, with the origination system as well, without the existing file dump process.
Okay, great. Thank you, Will. I appreciate that. And Paul Bowen, you were the first guy with the first question out there. I just want you to know we're not leaving you hanging here. James, if you can take a look at Paul's question and then we can answer it towards the end of the call, that'd be great. But the questions are coming in fast and furious. So a clarifying question. So you are not using IBM blockchain platform?
Well, yeah, we are. The IBM blockchain tool set is a critical part of the overall system, and Hyperledger, of course, is the underlying. So I mean, it's important, and Christian can help me with the distinction.
Yeah, sure. So not tooling as such from the IBM blockchain platform, where if you see IBP console has been open sourced to Hyperledger Fabric community, right? So what we are going to do in this instance is we're going to take the additional tool set what we had from the IBP, but on top, taking the Hyperledger Fabric by itself from the IBM as the certified images. We're going to take that comes with the tooling as well, and we are going to install Hyperledger Fabric support related images on top of the Kubernetes or OpenShift. That is where we get tooling as well as the open source of the Hyperledger Fabric.
Yeah, we haven't made our mind up on the difference in the Kubernetes versus OpenShift. There's two great options.
Yeah.
Technically, it's to the user, to the system, it's not a difference. Obviously, to us, it is. But
right.
Yeah.
Okay, great.
But it's nice to have that. There's a question about MISMO, underlying data standard.
Yep.
We're to say we're using MISMO, it would not be an accurate thing. However, we've taken the MISMO standard data dictionary into play. Christy and her team have spent a lot of time making sure we've at least captured the data elements. I'm not going to tell you that we're completely aligned with naming standards and things like that, but as far as the data elements and requirements are concerned, we're doing our best to make sure all of that is taken into account. You know, it's a huge undertaking to say that you are MISMO standard compliant, and I'm not sure anybody could ever say that. So, but I don't want to leave you with the impression we're not doing it. We're certainly paying attention to make sure that we meet those data requirements as they apply to our system. So let's, in the interest of time, we want to get ready to show you a prototype that Ranieri and IBM developed to show you one of those techniques, one of those things that we think are going to be really cool with the system and really provide some value. And it's just a design. It's called Merlin to Merlin loan transfer. Obviously, you've got to have two servicers who are on Merlin in order for it to work, but it demonstrates some of the Hyperledger capability and some of the other things that we're doing. And Karen, you were going to explain why do we pick loan transfer?
So I think we put a lot of little notes here on the slide, but I do want to say something that's very recent and relevant for anyone on this call who is interested in originations and customer retention and, you know, all of the things that are important to this industry. You know, there's a JD Powers customer satisfaction survey related to U.S. mortgages that was released about a week or two ago. Yeah, he's got it up on the screen. And two of the three noted issues that are appearing in the survey results, and I think they had over 8,000 or 9,000 borrowers who responded to it. Their problems are around loan transfers. And in fact, if you dig into the numbers in this report, you'll see that customer satisfaction drops about 20% when a loan is transferred. And that's because it's a difficult activity for borrowers in the way the loans transfer from one servicer to another. You know, I don't know how deep your knowledge is of servicing, but even if you transfer between two servicers who are both on the same system, it's still like a brand new thing coming over because the data is used differently by everyone, even if you're on the same system. So the data mapping and the loss of data and misunderstanding of the data as it comes across is very critical. Borrowers, this survey says only about 15% of the borrowers whose loans are transferred will think about going back to the original lender. Can you imagine that? You did all that work to originate a loan, you get him on the system, get him to the servicer, and then he loses confidence in that original lender because of this transfer process. So this is critical. And we want to show you how we see in the future when multiple servicers are on this platform, how that transfer will happen. And I think you'll understand then why we think, even though this transfer process doesn't seem like a big deal, it is affecting the borrower confidence in the servicer and the original lender.
So thanks, Karen. So here we have just a quick not a deep dive, but a dive into the underlying data platform that we were explaining, and we can talk this through. Christian, did you want to just walk through details here?
Sure. Yeah, no, the idea for this is to prove the architecture that it can scale for large volumes with an intent to keep proof on blockchain, so auditors and regulators can validate the authenticity of the data at any given point, and ease of loan transfer by enabling both servicers to get to see their respective data without any delay and with appropriate access restrictions at each level of components. Like, you know, we have web, API, and smart contract layers for each of those components. Each application node have the application stack components like APIs, web, and UI related, and connected to an off-chain store, like as I mentioned, Postgres and SQL, PostgreSQL, and object storage related components. And in middle, if you see, the blockchain node consists of the Hyperledger fabric components such as peers, smart contract, ledgers, and certificate authority and orders, many more, part of the Hyperledger fabric component framework.
So you'll see key items here. We're hashing the proof of the data, and we're keeping the actual data in the Postgres database, just to boil it down to the essential. And so with that, I think it's time to have the IBM team pull up the demo that we built. Let me stop sharing here. And we're going to show you the Merlin to Merlin loan transfer prototype, which will eventually become part of the production system. But we wanted to do some testing and things like that. So it's a limited scale down thing to really take a look at the Hyperledger and Postgres interaction and to gauge the performance, make sure that things are going to work as advertised and that the channel technology does what it's supposed to do.
Yeah, thanks, Will. I'll take over from here.
Thanks, Spencer.
Yeah, this is Spencer from IBM. So I'm going to be demoing a transfer of 100 loans from a servicer A to a servicer B. So let me go ahead and share my screen and walk through this.
Yeah, and while he's pulling it up, just remember, this is just a limited prototype that doesn't have full functionality. It wasn't designed for that, but I think you'll get the point as he walks through how it's going to work.
So prior to opening up the application, what I've done is onboard the loan data of the 100 loans. So what we're looking at here is the representative data of 100 loans. So you can see in column A, we have from 100 down to 199 is the IDs, making up the 100 loans. They're all going to be tied to servicer A in the system. And then you'll see here we have 50 or so representative fields about that loan. Now, in a real scenario, we might have 1,000 or even more fields, but we've boiled it down to 50 for the sake of the demo here. So now that the loans have been boarded into the system, I'll go ahead and open it up and show you what that loan transfer process looks like. So I'm going to log in as Alice, who is a representative from servicer A.
That's funny. We have an Alice in our test system as well.
So Alice will see here a table of the previous transfers, but I'm going to go past that for now, and I'm going to create a new transfer. So you'll see here, it's asking me to input various data about that transfer. So I'll go ahead and do that here. And we're going to transfer this today. Now, in the real world, this might be staged for 15 or more days to meet regulatory requirements, to alert the customers that their loans are being transferred. But for this, it'll be a same-day transfer. So we're transferring 100 loans from A to B. And then I'm going to input a little bit of information about who's buying those loans. So the investor. So lastly, I'm going to upload the loan numbers that I'd like to transfer. So what I've done is take a spreadsheet here, and you can see that I have the 100 loans and just the loan numbers from servicer A. So we're not inputting all of the data here, it's just the numbers. So I'm going to upload this spreadsheet. And again, in the future, maybe it's not a spreadsheet, maybe we're selecting the loans we'd like to transfer from a UI. It's just an early prototype. So I'm going to initiate the loan transfer. So now when I hit initiate, all of the data related to these loans, including, I never mentioned, I've also uploaded 2 documents for each of those 100 loans. Again, there might be 10, 20 or more documents in a real scenario here. Each one has 2. So when I initiate this loan transfer, all of the data will now be visible to servicer B, including the documents and all of the data. So there's no physical transfer of the data from A to B. It's a permission switch on the blockchain when I hit initiate here. So I've gone ahead and initiated that, and let's go ahead and look at it. So this is our transfer. You can see, again, all the data from A to B, it's pending. And here we can see a table view of the 100 loans. Now this is highlighting some of the the important fields in this table view. We can click into them. We can see the documents that I've uploaded. We can download these documents, view the documents. In this case, we have a balloon mortgage note. And then you'll see here, we have the old loan numbers, which are related to servicer A. And then we have the new loan numbers. This is blank. This will be filled in by servicer B. So what I'm going to do next is log out of Alice from A and log into Bob from B and show what the acceptance of this transfer is going to look like.
This ability to collaborate and confirm between these two servicers before it actually goes is going to resolve a lot of the pitfalls that these borrowers are falling into during the transfer process.
And also a dramatic reduction in effort from both sides.
Yeah.
One question from a hash perspective. So when is the hash going to be created for that transfer? And I assume it's going to be at the loan level, not at the servicer level.
That's right. It is at the loan level. And once it is accepted, then the hash will get generated and and get stored onto the chain.
Okay,
so at the loan level.
Okay. And so when the new loan number is created and added to this page, for example, that's when the hash is created and written to the block.
No. So that is the mapping done. But there is an actual action taken on the screen. I think Spencer is going to do that. Click the accept, then the servicer B is actually accepting the transfer. Then the hash of the loan will be generated and get stored.
Okay, understood. Thank you.
Sure.
And so, now Bob from B, he's seeing all of the data that was. So Bob is going to review all of these loans, and make sure that these are the 100 that he would like to accept in the transfer. So he can view some of the primary data in this table format here, or what he can do now is go ahead and export this to CSV, and here he'll have a view of all of the data available for review. Now, what he's going to do after review is tag servicer B's loan numbers to each loan. So I'll go ahead and do that. And we'll just call this the old number plus servicer B.
And again, while Spencer's doing that, just to make the case, this is not how the real system will work. We just took some shortcuts, make it easy from a prototyping standpoint to use the spreadsheets for upload and download. However, a lot of servicers work that way today. So that's not to say we wouldn't have that feature, but we certainly have an online capability for this sort of thing.
So Bob is then going to upload, his respective loan numbers and submit those loan numbers. And now you'll see that here they're in the system with each of the new loan numbers. So the loan transfer isn't complete yet. B will need to accept the transfer, and in this case, when he clicks accept, it will be a final immediate transfer of ownership from A to B. So I'll go ahead and do that here.
And so at that point, servicer A will still have a record. They'll still have all the records that they created over the period of time they were servicing. But they won't have any of the new activity created by servicer B because they've picked up responsibility for it. So B gets all the historical information and plus is the active servicer going forward. A still has their record.
So after clicking complete, you'll see now the transfer status is complete. We see that the previous servicer was A, but at this point now the ownership and the future history of the loans will be tied to servicer B. So the last thing I'll show here is just I want to go back to Alice's screen and show what they'll see. As Karen mentioned, A will see all of the previous history of that loan for very regulatory or reporting compliance requirements, but anything that happens to the loan past the transfer will only be visible now to servicer B. So
And A sees a zero balance.
so now, yeah, you'll see the UPB here for A is showing 0 as it's now tied to servicer B.
Mhm. It feels like a dream. Transfers are so bad in every way for the servicer and the borrower and the investor. You know, we've had Ginnie Mae and CFPB and all of the GSEs. They've all come out with a lot more scrutiny over the servicing process, and it's because of the borrower issues that get created in the way it's done today. So
Maybe this is Karen for you or Christy. There's a question on the chat. Is there a cash settlement feature that calls funds due to or from current to new servicers for advances, escrow balances, et cetera?
mhm. Yeah, go ahead, Christy.
So there will be fund settlement, but if the question is related to is Merlin going to do that specifically, I think for this first go round, the expectation would be how it's done today. So there'll be reports that corporate accounting can get. The cash will transfer like it normally does, and then at some point in the future, when we
Yeah,
get
that's
to
on
that,
our roadmap. Yeah.
it's on our favorite thing. It's on our roadmap for sure.
So I think that we just, Spencer did a great job of just going through that and showing you step by step. And obviously underneath that, as Krishna explained, the blockchain is doing its thing. And of course, there's some programming, some API calls, things like that, smart contracts, of course, that are doing the writing of the hash to the chain. But with a little bit of development work, you have a significant capability. And it was just, again, we just used it to highlight the consortium, the channels, the Hyperledger, the approach that we're taking, and it shows you some of the future capabilities that you could extrapolate from that. And so that's, if there's any other questions, anything like that, happy to help answer. And I think I share the next page here, which has some contact information on it. And with that, I'll just throw it back over to Marvin, and thank you.
Thank you, guys. That was an excellent presentation. One thing that really stood out for me as we were going through those slides in the demo is you guys made a concerted effort to make architectural decisions that address responsiveness. From my personal experience, the servicing platforms that are out there, unbelievably slow. And I think you guys went to great pains to address that. So definitely congratulations on that. That looked fantastic.
Well, thank you.
Thank you.
Our approach, we didn't say much about Postgres because the highlight today was Hyperledger, but certainly with the scalability and the parallelism on Hyperledger, and couple that with some of the, I'll call it pseudo vertical scale, horizontal scalability with the replication and things like that are available in Postgres today. I think we're going to have, and of course, following the architecture as we've described, I think we're going to have a system that works very well under a heavy load, with millions of loans and thousands of users and hundreds of thousands of borrowers logging in through a portal, however that goes. Yep. So thanks for that.
If anyone else has any questions for the Ranieri team, I'm going to go ahead and leave this last slide on there. You guys can reach out to them directly with any questions or comments. If you want, you can also just post questions on the Discord channel for the Hyperledger Mortgage subgroup, and we'll get those answered if they're general questions around this. But overall, thank you, Karen, Will, Spencer, and Krishna. This was a fantastic demo. Definitely appreciate it.
Thank you.
Yeah, everybody, this was a great presentation. I've actually been getting pinged with a lot of comments as well directly to me. Very impressive what you guys are lining out. I appreciate you guys coming and doing the demo. And Paul, in follow up to your LTV question on Milo, wasn't able to find the answer while we're on this call, but I'll continue to take a look and see what I can get back to you.
Yeah, that's great. I will, because I wanted to follow up with Milo on some things anyway, so it would be good for me to go in and not be dumb when I first call them. I appreciate it.
No problem.
Okay, the last thing I wanted to cover, because we are already past our time, is the next meeting is September 8th. That's going to be James Schoening and Casey Rock from the Hyperledger IM project. They're going to demonstrate their Hyperledger wallet. And then the next couple meetings, we're tentatively talking about property records and smart contracts, and then a blockchain panel discussion potentially in November, maybe December. So with that, I think we've gone through questions. I just want to say thank you to everyone. Apologize for running long, but I think it was definitely worthwhile. Thank you, everyone. Have a
Thanks,
great
Marvin.
day.
Thanks a
Thank
lot.
you all.
Thank you.
Take care,
Thank
everyone.
you.
Have a great day, everybody.
Bye.